Hey guys, welcome back to the Little Real Estate Podcast. Today, I'm super excited, as I always am, to have Stephen Franke joining us. Stephen is the Executive Vice President of C1 Insurance and MyUtilities. Did I get that right?
You nailed it.
Okay, good deal. You guys may also know this is the first podcast in our new podcast studio.
Yeah.
So we've got our new logo up there.
Yeah.
We had that designed by a consultancy called OpenAI. They have...
It's a big shop.
It's a big shop. It's a big shop.
It's expensive.
It was ChatGPT.
Yeah.
Is what it is.
Yeah.
Well, dude, I want to start the podcast the way that we start all of them. If you don't mind, tell us about your, who you are, what you do, and then I'll have probably a million questions to follow up from there.
Starts, I was born in Bryan, next door to College Station.
Heck yeah.
And I'm a third generation Aggie. And
Heck yeah again.
Grew up, my granddad was a cattle rancher, and so he studied ag economics at A&M, so I grew up on a cattle ranch out in Brenham.
Did you go to the Bluebell factory a lot?
All the time.
Is that like what else can you do in Brenham? Is it?
You ride horses, eat Bluebell, and that's about it.
That sounds like the ideal American.
It's a good childhood.
Yeah.
Young age, grew up in Austin, grew up in Westlake, which is a great part of town of Austin. Made my way back to A&M and found my way to insurance and haven't looked back. It's all I know. Yeah. And it's been a fun ride.
So your family's in the cattle kind of world. How did you end up in insurance? That's a little bit different.
That's a jump. So my mother was at A&M and she got a job as a secretary for a guy named Richard Smith, who owned a company called Coldwell Banker United Realtors, which was in the heart of town of College Station.
That's like the Coldwell Banker that we know, right?
Yeah, so they were a franchise owner, but Coldwell Banker parent company, and then Richard owned a franchise, and he had just started it.
Got it.
I'll get to your question here in a moment with the story. So she worked her way through that organization from the ground up. Number one employee, Richard, her. They grew that organization through acquisition over the course of about 20 years to the fifth largest real estate company in the United States. How I made my way into insurance was through my mother and watching her and what she did with that organization I'm graduating from A&M. It's 2008. We're in a deep, deep recession. And the natural inclination that I had was I'm going to get into real estate because my mom was doing it. I watched her do it my entire life. She said, absolutely, do not do that. Terrible decision. Run far, run fast. Go find a industry that's durable. Go find an industry that is not recession proof, but insulated from recessions. And go find an industry that allows you to be with people and serve people and be in a sales role.
So she gave you advice to do something in sales.
Yeah, 100%.
Was she in sales at that point?
No, she was more in leadership. She transitioned in. She kind of wore all the hats along the way. Before they sold the organization, she sat in the COO seat.
Okay.
And so she kind of rose through the ranks over the years.
That's cool.
But she was like, don't do real estate. It's boom and bust. It's dynamic. It's crazy. It's stressful. You're riddled with anxiety.
Yeah.
So found insurance and then got a job in Dallas-Fort Worth right out of college and never looked back.
Interesting. Did you was she like, hey, you go get into insurance that's tangential. I'm an Aggie too, so I can't say that word.
Yeah.
Tangential.
Yeah.
Please do not edit that out. Leave that on in there. The people need to know. Yeah. Please comment below how to spell tangential
and the dictionary meaning of it
and what it means. Yeah. This is where you could chat GPT and let us know how to say it. But it was a parallel industry, is probably a word I can say.
Yeah.
To real estate. So was she like, hey, you should get into this because that's what I'll support you and kind of help you grow your business in insurance? Or
she was never, especially at the beginning. So I worked for an organization named TWG Insurance right out of college. Now it's Goosehead. It was a small but mighty team. And I learned through doing a lot of inside sales, so like a lot of call center style insurance, that I loved insurance, but I really wanted to transition more to a referral-based, relational-based environment. And the opportunity really wasn't on the horizon for me then in the organization at that time to go do that. When the idea crept into my mind, and my business partner, Murray McKee,
who's also an Aggie.
Who is not an Aggie.
No way.
He is not an Aggie. He went to SMU.
Okay. That's kind of a neutral school in my mind.
I mean,
it's like neither. It's
like a big high school.
Exactly.
Yeah.
It's a big high school for
Yeah.
people who are from California. If you want to keep being in high school. Anyway.
Or Kentucky, from where he's from.
Sorry,
But-
Murray. Nice to meet you, by the way.
Yeah. No, we always give him a hard time because the 4 partners, 3 of us are Aggies. And
Yeah.
he's the outsider.
So, okay, so he was working at you said it was called
TWG.
TWG.
Yeah. So we were working together.
Okay.
And so he and I were working together. We're going through a season of change and transition of what's next. And we're both young. I was 24 and I think he was 26, maybe. And it was time and opportunity to take a swing, in my opinion, speaking for myself, to go try something new. And so that was kind of the genesis point for me to go see if we can take a swing on ourselves and start C1. To answer your question, at TWG, not a whole lot of support from my mother. Intentionally, she wanted to make sure that if this was the path that I was going to take, go cut your teeth and learn the ropes.
Yeah.
And after a period of time, I will support you at that point.
Mm-hmm.
And the moment that I said, I'm going to leave and help start an organization is the moment that her support went from nothing to 100%. And she's like, okay, he's all in.
Yeah.
And because I left in September of 11 and C1 was October 11. And then 2 weeks later, I got married to my wife, Diana.
Heck yeah, you
Yeah.
did.
So it was a big month. That
Dude.
month. Yeah.
Wow. That sounds like me. I graduated from A&M 2 weeks later, got married, which is what you do when you go to A&M.
Yeah.
That's classic. And then we both started jobs, moved across the state, all in a 3-week span.
Yeah. I mean, that's just what you do.
It is
if you
what
find
you do.
your person,
That's right.
That's it.
Who's an
you're
Aggie?
just like, say it again.
Who's an Aggie, which always
Who's an
helps.
Aggie? My wife's an Aggie.
Is your wife an Aggie?
Yeah, we met at A&M.
Okay.
Yeah.
Awesome.
We met back in 2006.
This is that. Yeah, we're not helping our cause here.
No, I mean it's the Kool-Aid's great. Drink it.
Exactly.
Enjoy.
Exactly.
You know?
So okay, so it's September and that's October. You're getting married and you're now helping start a business. So is it just you and the 3 other guys that are going to do this?
So we had
thing?
2 partners that kind of helped us out with initial capital, and then Murray was sitting in the leadership role, and I was functionally actually the first employee.
Okay.
And my role has been and always has been centered around relationship building, revenue driving, sales. You know, that's really kind of where my giftings are.
Yeah.
I've had to wear a lot of different hats along the way.
Sure.
But if you said, what do you wake up thinking about for the last 15 years? It's like, how do I go drive revenue and relationships?
Yeah. Well, let me just back up then. So was Murray doing the same thing you were doing at TWG?
He was.
And then how did you guys decide, hey, you take this role, I'll take this role?
Natural giftings. You know, like he is a great visionary human. Yeah. I am a great operator. And so it's a good yin yang. And, you know, for me to look out 10 years from now, may or may not come to fruition. He can cast it and I can go figure out how to go do it.
Yeah.
And a lot of, both of our businesses, how to go do it is to drive relationships, build relationships, and inevitably that drives opportunity. Yeah. And guides you towards that vision.
Okay. So something I know about you prior to this podcast, we actually got to go spend some time together. I guess it's been a couple weeks now, but so you were on the rugby team at Texas A&M.
I was.
I'm totally going out of order here, but I feel like I need to go back to understand who you are now. So how in the world do you get into rugby in, well, I guess in Westlake? Was it Westlake that you got introduced
I didn't get into rugby at Westlake. I got into rugby at A&M.
Okay.
And so I had a good friend of mine from high school. We've actually known each other since 6th grade.
Yeah.
Grew up in the same neighborhood. I ended up going to UT San Antonio freshman year of college in a futile attempt to try to play baseball.
Okay.
And it immediately
classic
failed.
Westlake.
A classic failure. And I immediately realized I was not good enough.
Sure.
And so I transferred over to A&M sophomore year, and I roomed with my buddy that I grew up with. And he played football. He played rugby in high school. He's like, you're an athlete. Just come out and see how it goes. Yeah. Then the rest is history. That's how I got into it.
That's crazy. So you had no experience. You just jumped into it.
Zero experience. Yeah.
Interesting. So that was like that was the thing you did at A&M when you were there. Because A&M's super big. For those of you who don't know, Texas A&M's really big on involvement and doing different clubs and organizations because College Station really doesn't have a lot to do.
There's you got to find your people, find your thing.
That's right. Yeah. There's no mountains or beaches or valleys.
It's landlocked.
It's it's got a college. So
Yeah.
interesting. Okay, so what did you study at A&M? Was it? And the reason I'm asking this is because I'm, were you like at A&M like, man, I'm an operator, sales type? Like, were you studying those things, or were you kind of just like, I'm playing rugby and hanging out with my boys?
It depends on the time that you asked me that question. Like first few years, I was just kind of there and with the guys and enjoying the college life. Got a little bit more focused in the tail end of my college career. I kind of hopped around in majors. I was history, I was political science. I ended up in economics.
Yeah.
And so
that's like the classic salesperson route.
Yeah.
You're like, I don't know. I like hanging out with people.
Yeah.
Engineering is too hard.
Way too hard.
Business has a lot of Excel.
Yeah. I'm not that good at it.
I'm not that good at it either. Yeah. That's why I do podcasts.
Yeah.
I can talk.
That's why we're here. Just
use words like tangential.
What'd you say?
Yeah. I need to let that go. Definitely need to let that go. Okay, cool. So that makes sense. Okay, so I just wanted to get a little bit of background to understand, you and your partnership with Murray and how to decide that. So my question, because we have a ton of Fortune 500 CEOs that subscribe to this podcast.
I'm sure.
And they're always asking,
Yeah.
What advice do you have for us? And so I would love for you to give some advice for those people. Jamie Diamond, good to see you. Thanks for joining.
Yeah.
So please don't sue me for using your name unlicensed. That was a joke.
Yeah.
And
lots of asterisks tied to it.
Yes.
Yeah.
Chase Bank's a great bank.
Yeah.
It's great for a lot of things.
Yeah.
Not mortgages, but okay. So my question is, looking back on that time when you guys are kind of forming this thing, I feel like there's a lot of lessons that you are learning you don't know you're learning when you're doing something like that.
Yeah.
And so is there anything looking back that you're like, hey, I would do this differently, or man, we did this way and it really worked out and we didn't, we kind of accidentally, did it right.
Hit it. There's always going to be a lot of failures as you start things. The biggest thing that I can look back on and dip into is, what did you learn in your failures? And what did you learn that you could do better or never do again? You thought this was a great idea for a business initiative and you're going to go spend XYZ dollars and time, money, effort, and there's no plan behind it. Because at the beginning, whenever you're starting something, whether it be in your career or a business or whatever, you're naturally inclined to say yes to a lot of things just because you're like, I got to go build something. And in your business and my business, you're always going to say yes at the very beginning because you just see it as opportunity. And sometimes the opportunity hits. Unfortunately, most of the time it doesn't.
Yeah.
And learning in those times that it doesn't, why did you say yes and what could you have done differently to capitalize on that opportunity was a big learning for me personally. Because it's like, it's like you take the meeting anywhere, any place at any time, whenever you've got nothing on your calendar that day. And that means you drive to College Station or you drive to Houston, you drive to Austin.
Did you do that?
I mean, all the time. I mean,
I
would
for like, give me some details. Like, what do you,
yeah,
like who, like a real estate agent calls?
Real estate agent calling and be like, hey, I'm just pounding the pavement, grinding. I put 40,000 miles on my truck in 1 year, just driving around Texas, staying in motels and things like that.
And you're 25 and recently married.
25 and recently married.
Holy moly.
Yeah. And if you don't do that, you don't learn. So I love looking back at that time and saying, I'm glad that I did that because I learned what to do and what not to do. But the biggest thing that I did learn is that relationships matter and making the effort and showing up matters. And I've still got partners and relationships that I built 15 years ago, 12 years ago that we're still working together today because I would drive for a 9:00 meeting in Austin. I would leave Dallas at 4 a.m, have the meeting for 30 minutes and then scoot on back to Dallas and be back in Dallas by 1:00.
So like I'm hearing, because I feel what you're talking about so deeply. I've only been doing this it'll be 4 years in December.
Yeah.
And so same thing. Like I remember driving to Granbury and driving, anywhere that somebody would take a meeting with me, I would go.
100%.
And the problem with that is it's not scalable.
It's not.
And not sustainable.
No.
And it's hard to build a business that way. But you're right. Like there's a balance between like being willing to be the guy that will do anything for their partners.
Yep.
But also, if you do that too much, you end up hamstringing yourself. So
Yeah.
how have you managed to find that balance? I'm asking for me because
Yeah.
I read some books that say you need to just say no to certain opportunities, and
Sure.
and so maybe that's what it is. But would love to hear your take on it for a young salesperson like myself.
I mean, the no filter is powerful. So that is a very powerful thing, but it's hard to say no, especially at the beginning. You have to have a good team around you because you can't do everything. You can't be a jack of all trades. Like you have to be an expert in one, maybe two things. At the beginning, you don't have a team around you, so you're an expert in nothing, but you're doing a lot of things. You're busy. You're doing a lot of activity, but you're like, I hope this activity generates results.
Yeah.
At a later date. But what I've learned is if you can get people in the right seat at the right time in the organization, doing the right things consistently, that's where the magic happens. And so if your gifting is I'm really relational, I'm not really operational, go find somebody that is operational.
Yeah.
So that you can amplify your giftings and go out there and evangelize those as much as possible.
Yeah.
Because you asked me to go sit and build a pivot table in an Excel spreadsheet. I can do that because I've learned out of necessity today. Do I enjoy doing that? I do not enjoy doing that.
Yeah.
What I do enjoy is spending time with, people like you and anybody else that can help drive business.
You could have just left it at me. You didn't have to throw anybody else in there.
Literally anybody else. Yeah. Yeah.
I would hang out with anybody else. Yeah. Okay. So that is super helpful for me and something that I've been thinking a lot about. I know a lot of people think about that.
Yeah.
A lot of our partners are in the real estate business, and the magic is often in the person. There's a book called The E-Myth. Have you read The E-Myth? So, I'm probably going to butcher summarizing it, but
it's been a minute. So it's going to sound great to me.
Yeah, it's tangential to what we're talking about. Tangential. I'm pretty sure it's chol. Have you looked it up yet? Tangential.
Nailed it.
That was right. I should have just stuck with it.
Yeah.
I should have stuck with it.
Yeah.
I have no idea what we were talking about. I know now. So a lot of our partners are in the real estate business, and the magic is often in their personality and who they are. And it's okay. Please leave it in there. I want the people to know what it's really like.
This is a real podcast.
This is what's like. We're like Rogan 2.0.
Yeah.
So they say. So my mom says.
Yeah.
So the magic is often in these, dynamic personalities, and you attract business and you attract opportunity because of that. But then the challenge is like, if you have 3 home buyers at the same time and they all want to see a house on a Tuesday night.
Yep.
Well, that doesn't work.
How are you going to do that?
You can't be there in 3 places at once. So
right.
I talk a lot with our partners about, well, how do you serve 3 clients at the same time? And I think a lot of people are still figuring that out, but I think having the right people on the right bus is helpful. But back to the E-Myth is what we were talking about. Essentially there's 3 like roles you can play in any business, mostly small businesses. You can be either the technician. So to use the example of a pie shop, you'd be the, Stephen's Pies. You start making pies. Everybody really loves the pies. And so there's a line out the door, but you can only make so many because you're the technician. You're the one making the pies.
Making the pie.
And so really to grow the business, you have to step up to the next level, which is management. And so at that point you have bakers, but they don't do it the way that you do it. So somebody's got to manage it. Somebody's got to count the beans.
Correct.
And the challenge is a lot of times like the person that's really, really good at being the technician is not a good manager. And so that can be a challenge. But really I think where most small business owners and entrepreneurs want to be is that third level, which is the entrepreneur, which is where you're kind of casting vision, you're the big picture. You're not counting the beans. You're not necessarily managing day to day.
Yep.
And you're not making pies. But I find in my business, like I get pulled back into pie making a lot because people want Stephen's Pies. They want them made by you. And so I don't know do you feel like you've been able to navigate that or?
Yeah. I mean, we've gone multiple times through the arc of that. And the reason why people, you can speak to anybody in the organization at SFMC, like Stephanie Johnson calling you out. She and I have worked together for years, and she's always been so accepting of the fact that she knows that there's going to come a day where it's not going to be me making the pie. But she wants to make sure that I'm watching that person making the pie. And if I'm not, she's going to call me out on it.
Yeah.
And she's going to hold me accountable. And every once in a while, I got to step back in and make the pie. And the learning that I've had from her as an example is that you have to be willing to step back in and make the pie. And you can't fully separate yourself from the business that you've helped build.
Interesting.
And that is my learning. I'm not saying it's right. I'm not saying, and so, and you see it in all aspects of businesses. That's, they grow and then they're like, okay, you want to get a managerial band in there, and then you want to be a kind of a leader role. And you have this expectation that this individual on your team is going to, care about that relationship as much as you did. Well, it's on you to hold them accountable and bring them into the equation of understanding of the value of that relationship. But the relationship isn't really with that individual. It's with the person that created it. And so going back to relationships matter, like I am always willing to step back in, and I do it every single day, of making the pie, taking out the trash, doing the things that are necessary for the business. Now, that's probably not the most scalable mentality.
Sure.
However, in a business that is rooted in relationships and referrals, like you have to be willing to roll up your sleeves and get back into it every once in a while. And I actually love it.
Yeah.
Like, that's,
you like making pies.
I like making pies, and it's not a bad role to step back into when the time is right.
Yeah. So the one's worse than the other. It's just a different.
No, it's just different. And
role. Some
days you're doing, leadership management. The other days you're making the pie.
Yeah.
So that's an okay thing.
Yeah.
In my opinion.
Yeah. That's so Sean Broussard is our founder and CEO and supreme overlord of all things mortgage. But I was talking to them on the phone earlier today, as you know, you were patiently waiting for him to stop giving me advice.
Yeah. He's good at that. Though. He's got some good advice.
He does some good advice. He's been around. He's been around for a minute. But one thing that he is the same way, and sometimes sometimes he says it in like, man, how do I get out of pie making? But he loves it. He does. He acts like he doesn't, but
he wants to do other things. Like he wants to believe that he wants to do other things. This is me just making an interpretation or discerning.
Yeah. He
still likes making the pie.
Well, he does. And I think that's what's made him so sustainably successful in the real estate business. It's he knows. In fact, I think he loves it when I call him and say, hey, this loan doesn't work, can you help? And he loves jumping back in and making pies. And so I think in specifically in our business and relationships, I'm just coming to this conclusion after you've talked about it, that you can't ever not love that part of it.
No.
And be in leadership. You've got to be able to jump in at any time. And
if you don't love it and if you don't enjoy it, how are you going to have people follow you? And whether it be in a management role or in a leadership role, if you're not living and loving it, then they're not going to live and love it.
Yeah.
And that's my belief. It's like a player coach. One day you're going to be a player with them. The next day you're going to be a coach. And if they see you loving it, they're going to be like, yeah, like I'm in. Like I love it too.
Okay. So you guys have how many outside salespeople is what I would call it?
On our advisor team, we've got, right at 20.
Okay.
On the insurance business.
When did you guys start your business? At what point were you like, hey, I think we could start to bring in some other people? Did you, I guess let me ask you this way. Did you start with, inside salespeople to fulfill your business, or did you go start getting your own independent producers?
Producers. Yeah. So we didn't have any business to give to anybody at the beginning.
Yeah.
So it's like, but we did know that we can only grow so much with two guys just pounding the pavement. And so early on we hired, I think in the first year we maybe hired a couple, and then year 2 we hired, a couple more. And a few of those individuals are still with the team today, which is amazing. It's really rare to be in a sales organization and go through the growth cycles that we've gone through, from zeros on the scoreboard to numbers on the scoreboard today, and then walk the path with us and be patient and be diligent and be loyal. So we've got individuals that have been on the team for over a decade, and we've only been around, starting next month, 14 years.
Yeah.
Which is an amazing thing to say, in my opinion. At the beginning, we had no business to give. And so we said, we're here to support you and train you and provide the platform to help you grow your business within ours.
Yeah.
And how to go do that is to go do this, what we're doing right now, what you're seeing Murray and I do. And I'm going to bring you alongside me. I'm going to make you come with me. I'm going to make you go on the cold calls. I'm going to make you, because I'm cold calling with you.
Yeah. Yeah. Yeah.
I don't know anybody that loves cold calling. I haven't met that person that's like, I thrive on cold calling, but it's a very impactful element to, kind of learn your style and create an impact quickly. And doing that with somebody was a really impactful, mechanism at the beginning.
For sure. And so you had a background. So you you had already been through that a little bit with your original introduction to the insurance business. But so you guys, what was your sales pitch or what would you tell people like, hey, this is why you should come join us? Like, what was the mission behind C1 and what were you guys doing that attracted people?
Yeah. I mean, the biggest issue in the insurance space, in my opinion, is that the client is always viewed as a commodity and is not genuinely cared for their insurance needs. You can see that on the factory floor with the big shops out there like Progressive and Allstates and all that. And everything's
Chase
just
Bank.
Chase Bank, Jamie. So our message to our people was insurance is always this kind of 4-letter word to the consumer.
Yeah. Nobody
really likes it.
Yeah.
But it is an incredibly impactful financial tool in the time of need. So there is a noble nature to it. So
is that why you guys have a shield?
That's why we have a shield.
Really?
Yeah. That is why.
You can't see this, but he has now you can see it.
And,
maybe you can throw up the C1 logo.
Just flash it
so they can see the shield.
And caring for a client is really important in any business that we do. But the only time that people are calling their insurance agents are for 2 reasons: to complain about how much they're paying or something's going on.
Yeah. And
that something that's going on can be really devastating, catastrophic. And so the message that we had and that we have today is to always put the client first in everything that we do. That's what C1 stands for. And so
C1 is client first.
Yep. And so every business decision that we make is all rooted around, client care, client focus, who we work with, our partnerships with carriers and things like that. But the message that we had at the beginning was you can create an impact in somebody's life by having a good solution of insurance products for them. And you can do that through your approach to the business, and the sky's the limit, which is the sky's the limit is kind of cliche with any sales organization, but it's a blue sky, whatever you want to say.
Yeah.
So that was the message. And there's certain people that gravitate to that. And then there's certain people that are like, I do not want to do insurance. That sounds terrible. It's awful. And, have we gotten it right 100% of the time with the people that we've hired? No, but you got to take a swing on people. You got to make a bet.
Yeah. Okay. So you guys, you said 22?
Right at 20.
20 outside salespeople? Our businesses are very similar.
Very similar.
There's not a lot of people that go around, thinking how excited they are to get new insurance. Most people aren't thrilled about getting a mortgage. Like we're the guys you got to pay back, and so it's kind of I won't say necessarily evil because I don't think it's evil, but it's just
it's a necessity in life.
It's a necessity. It's not necessarily the most exciting thing, and even if if you really 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 knock it out of the park, like. The upside is like, hey man, thanks. That was a good experience.
Yeah.
And then the downside's pretty significant. So I feel like, it's a commodity. So like my dollars are as green as the next. My dollars are as green as Jamie Dimon's. The Progressive or the Travelers policy that you write is the same Travelers policy that somebody else writes.
They can write online. Yeah.
Yep.
Yeah.
So there's a commodity element.
There's a commoditized element
to both of our businesses. How have you guys differentiated? How do your salespeople go make a case for, hey, our coverage is different or better, or the experience, or what does that look like?
It's more rooted, because there's a common misconception. You can apply this in the mortgage world. Same thing for me, is that rate is not the ultimate element to getting the deal done. So meaning I can go find a cheaper mortgage rate than you guys. I can go look for it.
You can't.
I mean, I probably can. But the reason why I don't is because I want to work with people that genuinely care about my future in this home.
Yeah.
And structuring a deal a mortgage that's going to be aligned to not only a near-term, but a long-term solution. And so I apply that similarly to our business, is that insurance can be viewed as a commodity, but it is truly a tailored fit, product to the individual, because tolerance of risk is different from you to me.
Yeah.
And I could be highly tolerant of a risk, and you could have really, really risk averse. And so having the access to the products that are available to the individual and tailor fitting them and curating them, layering in expertise along the way, and genuinely caring for the client is our differentiator. That's how we communicate that.
So you guys, you mentioned Stephanie earlier, so I'll mention Stephanie now.
Yeah,
Stephanie's crushes it every year. She's fantastic loan officer in magazines and accolades, all well deserved.
Totally.
Do you guys have anybody on your team that's like a Stephanie that's just like continually crushes it with their business and clients?
We've got a few young up-and-comers that have been with us for 2 to 5 years that are absolutely kicking butt.
Really?
And they love what they do.
So what are they doing differently? Like, and okay, you say young too. These aren't people that have been in the business for
like fresh out of college.
Okay. Dude, you're firing me up, honestly, because in fact, I don't know, I'm looking at you now. I'm gonna tell you because you were there. We went on a dove hunt, and I was sitting in y'all's little tent afterwards, and looking out at your team, and so many people that I knew from A&M or knew from like a Christian organization I was in at A&M that had gone to different schools around Texas. But just looking around, I'm like, man, there's a lot of people that I know that are my age and that work for you guys.
Yeah.
And I look at the mortgage business and there's not a ton of young people in the mortgage business. So that I've been inspired since then. I'm like, I really want to bring in young salespeople that can go out and crush it. And so that is a total tangent.
I appreciate that.
As a tangent, but a compliment to you guys. I mean, I really, really would love to look up in 5-7 years and have a similar deal where we've got young, excited people who learn our business and go crush it. Because our business, like yours, is a great business. And I think people from the outside looking in sometimes see insurance and mortgage and they're like, oh, it's used car sales. No offense to used car sales. Yeah. But they look at it and it's like, oh, it's just a bunch of sales guys. Like, know, there's probably a bad reputation and maybe some of it's deserved. But and so I think for that reason, a lot of young people go take jobs that don't really let them fulfill their full potential. The thing about insurance and mortgages, it's like you can be an entrepreneur genuinely in it.
You are.
And make it happen the way you make it happen. So I didn't plan on talking that long about that. So I'll let you go back to what you were saying.
So, I mean, I think what we're talking about is like, what are young people doing in our organization that has achieved the success that they've achieved so far? And there's two elements that can't really be taught. And it's being tenacious and operating with grit and just exceptionally tenacious and constantly being at cause and on purpose for what you're trying to achieve in your career, whether it be monthly, weekly, daily, yearly, however you look at it. I look at yearly goals. You talk to an individual that's fresh into the business, whether it be in mortgage or insurance, they're going to look at it probably daily, weekly, monthly. Yeah. And just because they're just out there grinding. Yeah.
Well, you got nothing else to do.
Yeah. It's like, and if you're not doing it, it's like, maybe in the wrong gig.
Yeah.
And so like the skill sets that are natural that you just have to go find in a person are like, are they tenacious? Are they outgoing? Are they gritty? All those elements, all the things that we're kind of banged into our head at A&M. Yep. And lots of self-leadership, lots of making sure that you're doing the right things as often as possible for your business. And if you do that consistently and regularly, going back to Stephanie, I met her whenever, like week 2 after she started at Service First, coming out of the call center environment. And she's like, how do you go be successful? I'm like, every single day you have to go have meetings. Like if meeting. And that's how I've operated. Yeah. And if you do that every day, success will come. Might not be tomorrow. It might be in a year or 2 from now, but you'll start to feel the fruits of those labors. Yeah. And what she's done is she's stayed consistent with that. Yeah. Oh yeah. And the consistency is the key, because you'll see it in mortgage world. I see it in my world. You'll see this arc of your competition, high activity, high results, and then it'll kind of go like this.
Yep.
Because they're not going to stay consistent with that pursuit.
Yep.
On a regular basis.
I call that porpoising, where you high activity, high results, but then you get busy, stuck in like fulfillment, and then you go down and you're like, well, I have nothing, my business crashed, and now you go back up to, and you porpoise. And I've tried to get out of that where I can, but you do see that.
Yeah.
And I experience that myself too.
Yeah.
Okay. So, I want to shift gears a little bit. Yep. So you have 4 children.
I do.
That's a lot of children.
It's a lot of kiddos.
I have 2.
Nice.
And 2 feels like a lot, but my wife keeps saying we're gonna keep going.
Yeah.
So it looks like somebody might be in the background of my podcast. Hello.
Hi.
Hello, background.
Yeah.
So okay, you have 4 kids.
Yeah.
You've been married for 12 years.
Almost 14.
14 years.
Yeah.
I tried to guess. So
yeah.
It's 2025 now. That time is fun.
Yeah.
Okay, so how have you managed, as you know, as most people know, if you're listening to this, you understand that the real estate business is very demanding.
Yep.
The hours are non-existent oftentimes. How have you managed to be both a parent and a husband and all the things that you need and want to be at the same time as growing your business?
Yeah, I mean, sometimes really poorly. I mean, that's just the reality. It's like the biggest thing about being a good leader of yourself is being honest with yourself and convict yourself as much as possible. And so at the beginning, the benefit that I had at the beginning was I had a highly, highly supportive spouse with Diana. The fact that she would support me in a season of transition, going from at least having an income to not, and getting married in the same breath, best decision that I've ever made, maybe the worst decision she's ever made.
Yeah.
But she understood at that season of our relationship that I had to be on a lot, but also being intentional with continuing to date her even into marriage.
So what did that look like?
I mean, the difference for me in the mortgage business or the real estate business, people aren't really shopping for their insurance on a Saturday.
Yeah.
People will call me because they are shopping for a home and they're curious about insurance on a Saturday, and you take the phone call. But being at 3, home showings on a Saturday has not really been a part of my equation.
Yeah.
The positive of that is that I have a little bit of space. The negative of that is that the opportunity that presents itself for showing up to open that door and show that house or take that phone call from that realtor for you on a Saturday is that the opportunity for that deal is significantly different from an economic standpoint in comparison to me. Mm-hmm. My business is way more of a marathon. You make a good, healthy income over time, just as long that's where that consistency comes into play. As you build your book of business, exactly. So I had that benefit for myself. That being said, the first 5 years, so we were married for 5 years before we had our first child, Luke.
Yeah.
And so that was in 2016, whenever we got blessed with Luke. And then in 2018 with Harper, our daughter, and my wife was still working, in an office setting. I still consider her working a full-time job now, taking care of our family. She's probably got a harder job than I do. Yeah. Because you actually love the things that you're working on. Yeah. I love what I do, but
they're not your children.
They're not my children.
Yeah.
And so the level of stress that she has to bear today is significantly different than what it was whenever she was working in the corporate world. But there were plenty of times where I failed and took the phone call at family dinner. And, it's like, how do you structure the relationships to be able to find the space? And that can't be done at the genesis of a relationship. You have to build to that. Yeah. And so, creating boundaries is a healthy thing, but there's every once in a while you're going to step over that boundary, and you're going to have to take the phone call. You're going to have to respond to the email. You're going to have to open up the laptop at the kitchen table. And I've done that a lot. Yeah. And the blessing that I have is that I've got the accountability from Diana, but the understanding from Diana. So having a good partner in the equation enables it to be, kind of that ebb and flow and that balance to ultimately work out in that positive.
Would you so over time with your relationships, were you able to build enough trust where it's like, hey, I'll call you back, or what did that look like for you, I guess is my question.
Yes, is the answer. I would be like, hey, I'm at dinner with my family. Can I call you back in an hour? And the great thing about that is that it shows humility in the relationship. Be like, hey, I want to talk to you. I picked up the phone. I want to serve this relationship, but I need your support in my pursuit of, being with my family.
Yeah.
And oftentimes, if you dip into that relational capital that you've built with somebody over time, they're going to be like, yeah, absolutely. Like they just didn't even think about it. They're not like intentionally calling you.
Yeah.
I know Steven's at dinner with his family.
Yeah.
And I'm going to interrupt him. They're not intentionally doing that.
Yeah. How have you stayed not cynical towards the business that we're in? Because the reason I ask that is I've seen a lot of people who come into it, start out, doing all the things right. 2 or 3 years in, it's hard.
Mm-hmm. You hit the walls.
You get rejected a lot.
Yeah.
It's hard. And then they become cynical towards their clients and partners. Like, oh, why are they calling me at this time? Or why are they shopping me, or whatever it may be. Like, how have you avoided? Because I look at you and we don't, we're not roommates. So I don't know everything about you, but you don't strike me as somebody who's cynical towards your partners in the business. What's the difference?
I mean, cynicism presents itself often for me. And, it's like, why are they calling me? Well, they're calling me because I'm the guy that they know, like, and trust. Yeah. And so the time of that phone call is irrelevant. I'm the guy that they're looking to for advice or help and I want to be that guy. And so I have to remind myself of not getting frustrated or jaded by a client calling me at 7:00, which I've been frustrated. Like, it's a very reasonable thing. It's a very, it's okay to get frustrated about it. Yeah. And you just have to remind yourself of, why are they calling me at 7:00 at night? Why are they calling me on Sunday at noon? Well, I'm their person. And so you have to remind yourself of the value that presents to that person at that moment. And picking up the phone and being like, hey, I'm out and about. It's a Sunday at noon. I would love to help you. I can give you a quick advice, or can we reconnect tomorrow? Oftentimes people are like, all I needed was just a quick answer. Yeah. Yeah. And the negative of feeling so compelled and picking up that phone call is that there's an unfortunate reality that there are tens of thousands of me's out there in the world. Same thing for you. And so the reason why they're calling you is because they believe that you're going to care for them in that moment. Now, there's a boundary that you have to set, and you can set that casually. But being cynical about getting that phone call, that's actually a great thing that they're calling you. Yeah. Because you're the guy in that situation, which either you could be the backup position because they called what they thought was their guy, and then they're like, okay, well, I'm going to call Jake, and he actually picked up. He could potentially displace the number one. For sure. And which I love sitting in the secondary position. Yeah. Because that's my moment to shine. Yeah. And that's my moment to execute. And being in the primary position is always a phenomenal position, but you're having to, it's on rent. Yeah. And you have
it's for sure on rent.
And you have to show up. Yeah. Being in the second, like, you get to hunt a little bit. Yeah. And which is super fun. Yeah. Yeah.
That's a great perspective. That's like, what is it, Jalen Hurts, or somebody that says, success is not owned, it's leased, and rent's due every day.
Rent's due every day.
Yeah. That's good. Okay, so to wrap up our time, I want to zoom out, talk broader picture insurance. Okay. So if you're watching this, you have insurance, probably.
More than likely.
Pretty slim chance, actually, because you're probably on Spotify or YouTube, which means you have. Anyway, you probably have insurance. Yeah. But even if it's just your phone insurance. So you probably have insurance. You probably notice that insurance has gotten more expensive over the past couple of years. So why has that happened, especially here in North Texas? Yep. And then what do you think the next 5 years looks like as far as insurance goes? Yep.
I mean, the why, speaking to property insurance in Texas, let's talk Texas as a whole. The reason why we got to the spot that we were in 2023 and 2024 with this kind of meteoric arc of cost It started back really in 16 and 17 and not in our backyard. It started really in California. California sustained some pretty significant wildfire events and, multi-billion dollar events that caused just significant payout and significant destruction. And oftentimes people think about insurance from this really, it's me and I. No, it's a we ecosystem. And so every time that you are paying your insurance premium or I'm paying or he's paying or whoever, you're throwing it all into a big pot. And the insurance companies are going to try to make money on that pot.
Yep.
And they're going to reinvest it. They're going to go buy commercial buildings and do all sorts of stuff. Well, whenever you have significant catastrophic events that are isolated in a short period of time that are paying out billions and billions of dollars, well, where are they dipping into? They're dipping into that pot. And then so that all happened in 16, 17, 18 in California, multi-billion dollar events. And the issues that presented themselves in California became our issues because due to regulations, insurance companies couldn't increase the premiums.
Is that a state or federal?
State. And that's been a long-standing issue since the 80s. It's under the purview of consumer protection. And insurance carriers are like, well, we can't maintain profitability. Love it or hate it. They like to make money. They are a for-profit business.
Yeah.
And so it all started there. That was kind of the beginning of the snowball. Getting into Texas in 17, 18, 19, we saw a really strong growth in the real estate space. Lots of people moving here, lots of urban sprawl. We're seeing cows and pastures become master plan communities in Salina and Prosper and all sorts of, just as an example. And insurance carriers were really excited for the expansion because a new construction home is a really, really great risk for a carrier because everything's new.
Yeah.
And so the infrastructure's new, the plumbing's new, so on and so forth. And the builders typically offer some measure of warranties and things like that. So this is amazing. All this new construction, we want to go, write all this insurance. What they didn't account for was the weather patterns in those areas that those homes were being built in. And so we were seeing all this weather shift and the catastrophic nature of the weather. And catastrophic often is like a big bad hurricane or a tornado ripping through a neighborhood. Catastrophe in the insurance world is a big hailstorm. And hail happens a lot in Texas.
That's what we do here.
That's what happens. And so we have all this sprawl, and we have all this growth, and we're writing all this insurance in the late teens, and we're writing a $750,000 house in Salina, beautiful home, but the insurance premium is $1,000. And then they get hit the next year, and then the insurance carrier has to pay $50,000 for a new roof.
Yeah.
And they're doing that at scale. And so that became an initial issue. And then the COVID experience, catastrophes were continuing to happen, supply chain issues, labor constraints, costs of goods, everything was just this unfortunate perfect storm that insurance carriers were not prepared for on the heels of all this looming experiences that we're having.
Okay, so things got more expensive and insurance is paying for lumber and
all the things that we saw in the news. And so it's like you saw on any major news network, you get on there, they're having a ticker for lumber prices.
Yeah.
During COVID. And insurance carriers are saying, okay, what used to cost me $20,000, now it's costing me $50,000.
Yeah.
Because of all these, peripheral pressures.
Yeah.
And the insurance industry really had three levers to pull. One lever would be, okay, we're just going to shut down and stop writing insurance in certain areas. Other areas were, hey, we're going to decrease quality of coverage to mitigate cost expense in a claim. Third lever would be, we're going to crank on rate. And so we're going to crank up the rate on the consumer because we have to. Mm-hmm. And you saw all three of those happen. Mm-hmm. Insurance carriers pulled out of the market. So that limits optionality in shopping, which is not a good thing for the consumer.
Yeah.
They decrease the quality of coverage while maintaining a high velocity of rate to enable more profitability for them. Or they just cranked up on rate, maintaining coverage. And so we saw that all in an isolated, really 24, 36-month span. That's after insurance carriers, if you remember at the beginning of COVID, they were all banging their chests and giving themselves high fives because they were saying, we're going to give billions of dollars back to the consumer as financial relief because we didn't know what was going to happen with COVID. Mm-hmm. And I told all the carriers, do not do that. Keep the money, keep it in the war chest because we don't know what's coming. And so I sit on all these advisory boards for these carriers
Yeah.
in the state of Texas. Insurance rates go from $4,000 on a home to $9,000 overnight. And the customer out there is just like, holy smokes.
Yeah.
Like,
well, they call their mortgage guy.
It's your fault.
And they're like, what in the world? My payment on my mortgage went up
Yeah.
$680.
Yeah. And then it's your fault. And then you say, well, no, it's actually your taxes and insurance, which is a true statement.
This is true. Your rate didn't change.
The rate didn't change. So now we're transitioning to this environment to where we've reached a plateau and softening. Carriers are coming back into the marketplace. Optionality is really strong. And actually carriers are going from, I was charging you $8,000. Now I'm going to charge you $7,000 because I'm trying to retain you as a client. So we're seeing that softening. So imagine an environment where you're calling a buyer that you helped buy a home 2 years ago, fresh into the business, and you said, hey, your mortgage rate is $2,000. Good news. Actually, your mortgage rate now is $1,800. That's the conversations that we're having today. Like now.
So it's going back the other direction.
It's correcting in a softening.
Well, that's something that I've felt.
Yeah.
There was a period in there where it was like, man, I hope you get insurance.
Yeah.
And if you do, I'm going to say that again because I looked over there. And if you do, it's going to be extremely expensive. We had some policies that were quoted at, it was an $800,000 house. I remember this one specifically. It was an $800,000 house. They called 3 people. All 3 said, can't do anything.
Yep.
They finally got one. It was $24,000 a year.
Yep.
And the guy tore me a new one.
Yeah.
Me.
Yeah.
The mortgage
you said it was
guy.
going to be $200 a month.
I said it was good.
Yeah.
I probably said it'd be $300
or $300 a month.
It was $2,000.
Yeah.
But yeah, I remember we started. I used to quote. We always had to quote insurance, and I used to just throw in $125.
Yeah.
And you'd be fine. And then it got to the point where it was like some are $125.
Yeah.
Some are
$2,000. Yeah.
So now I'm kind of like, hey, here's what we've got in there, but you need to call somebody and figure that out because we're kind of guessing otherwise. So, okay, cool. So do you think that continues?
I think so. I mean, I think that the industry has, the carriers are saying to us that we overcorrected, and how an insurance company makes money is through retaining clients, and the retention has gone from historically in the 80% year on year to the 60s. And so like, we can't do that again. And so with all the pivots and all the changes and also the behavioral shift of the consumer of insurance, how do I view insurance today versus what I looked at, how I viewed it 10 years ago?
Yeah.
I'm not going to use insurance for small little events. I'm going to only use it for really catastrophic situations. And that's either mandated based off of premiums or your deductible requirements that are in the marketplace today. And with all that hygiene that's gone through the book of business and the grand scope of things, I do cautiously, but a little bit optimistically believe that it's going to continue to just kind of flatten out and maybe slightly soften over time.
Well, that would certainly be good.
It would be great. It'd be great for all of us. It's like, the last 2 years we've been all getting it on the chin and we've been earning our stripes. And so it'd be good to get one less on the chin. Yeah. Which is always a fun thing.
Well, props to you guys for, if you're still in real estate and those industries that are tangential to real estate.
You got it. You got to know.
Mortgage, insurance, those things. If you're still in it, then good for you. Because we had literally 75% of all mortgage originators have left the business since I started the business.
That's incredible.
So I was walking up the mountain and everybody's walking down like, don't
Don't
do it.
go there. Don't go
Don't
there.
do it.
It's not that great.
And I'm like, no, I really think this will work.
I think it's awesome.
Yeah. Sean Broussard's like, you're right there.
Yeah. So close.
We were talking about this yesterday. Like for 4 years straight, it's always been like, you're so close.
You're
so close.
Yeah.
And then it will all just
dangle in the dollar in front of you.
Yes, exactly.
Yeah.
I'm close. Guys, I'm close.
He's close. He's there.
I'm almost there. Okay, so if somebody wanted to work with you guys and they're watching this, which again, a lot of Fortune 500 CEOs and
Jamie still been waiting for 15 years. Called you, left you a few voicemails. Yeah.
He knows. He's
he knows.
Call you back.
He knows.
He'll
us.
get to you.
Yeah. Yeah.
How would they get in touch with you guys? How can they work with you?
Yeah. The greatest way is just go to our website, c1ig.com, letter C as in client, the number 1, ig.com. You can connect with any agent that you want to connect to, go to our Meet the Team and just kind of cruise through the menu of our team and find the person that works best, that you think will work best with you.
Yeah.
That's the best way.
Okay. c1ig.com.
That's it.
Thank you so much.
Of course.
For jumping on the podcast.
Yeah.
Really enjoyed getting to spend time together. This is actually the first time we've sat down.
Long form. Yeah.
Long form. The
Yeah.
last time we did this, we were shooting into the sky.
Yeah.
I was shooting into the sky.
He was chasing birds through the field.
It was.
Yeah.
Had very, very, very little success bird
Yeah.
hunting.
But you
that's
miss 100% of the shots you don't take.
That's right. And if you're me, you miss 100% of the shots you do take.
I didn't say it.
So thanks for coming on. Thanks
Absolutely,
for checking
man.
it out.
Yeah.
Stay tuned for another one coming out soon.
Yeah.